What if I told you a seasoned investor is doubling down on stocks even as the market wobbles? While everyone else is hitting the panic button, this guy sees opportunity. His name is Paul, and he's built a portfolio worth over $1 million by zigging when others zag. Today we're diving into Paul's top stock picks, and trust me, some might surprise you. So buckle up, hit that subscribe button, and let's get into it. First on Paul's list is a company that's been beaten down but not broken, PayPal. Venmo, owned by PayPal, is crushing it with the younger generation. Paul believes in its long-term potential, and I can see why. Let's dive into the world of cosmetics with Ulta Beauty. Their same-store sales growth is consistently strong, proving people still spend on beauty products, even in uncertain times. Paul sees this as a sign of the company's resilience. Hold on to your hats, folks, because this next pick is a wild card. Alibaba. China's been in the news a lot lately, and not always for the right reasons. But Paul isn't fazed by the noise. He's focused on the fundamentals and sees a company sitting on a mountain of cash. It's a risky bet, but one that could pay off big time. Let's talk travel, specifically Southwest Airlines. Paul's betting on a comeback story. Historically, they've had margins in the 10 to 15% range. Paul believes they can return to those levels with fuel prices stabilizing and travel demand soaring. With Elliott Management investing $2 billion, Paul's not the only one seeing potential. Rounding out Paul's top 5 is none other than Disney. Disney owns a treasure trove of content, from Marvel and Star Wars to Pixar. Their theme parks are roaring back, and Paul expects their profit margin to climb back to double digits. Paul has his sights set on a retail giant that's weathered countless storms. Target. They've evolved into a one-stop shop for groceries, home goods, clothing, and electronics. Paul believes their focus on value, convenience, and seamless online shopping will drive growth. Next up is a company capitalizing on the demand for healthy and organic food. Sprouts Farmers Market. With more people focusing on well-being, Paul sees Sprouts as a smart bet. They offer fresh produce, organic options, and specialty foods for health-conscious consumers. No portfolio is complete without athletic wear. Paul's bullish on Nike, a company that needs no introduction. He believes Nike's global reach and innovation will drive growth for years to come. This next pick is not for the faint of heart. Paul's adding controversy to his portfolio with British American Tobacco. BTI has a massive global reach and pays a hefty dividend, yielding over 8%. Paul sees this as a way to generate passive income while benefiting from BTI's transition. For stability and diversification, Paul turns to Brookfield Asset Management, known for managing real estate, infrastructure, and renewable energy assets globally. Paul values their long-term focus, experienced team, and ability to generate consistent cash flow across market cycles. Paul's not afraid to invest in companies that have faced challenges, and Intel is a prime example. Intel has been losing ground to competitors, but Paul believes they have the resources to stage a comeback. They're investing heavily in new facilities and technologies, and Paul's betting these investments will pay off in the long run. From post-it notes to industrial adhesives, 3M has touched countless aspects of our lives. Paul sees 3M as a diversified powerhouse with a history of innovation. They hold thousands of patents and invest in research and development, which Paul believes will lead to new products and growth opportunities. Paul's bullish on American Express, a company known for premium financial services and loyal customers. Amex cardholders are higher income earners who spend more. Paul believes Amex's strong brand and customer service, plus its ability to attract affluent customers, will drive growth. Next up is Paycom, a company riding the wave of growth in HR and payroll software. More businesses are turning to cloud-based solutions, and Paycom is a leader in this space. Paul believes Paycom's user-friendly platform and strong customer relationships will help them gain market share. With climate change and an aging power grid, backup power solutions are crucial. Generac is well positioned to benefit from the growing demand for reliable power. Let's face it, people love their coffee, and Starbucks is the king of caffeine. Paul sees Starbucks as a global icon with loyal customers. They're investing in their digital platform and loyalty program. You might be surprised to see HP Inc. on this list, but Paul sees value in this legacy tech company. HP still holds a significant market share, and their printing business generates substantial cash flow. Paul believes HP's focus on innovation, cost control, and shareholder returns makes them a solid long-term investment. So, there you have it, Paul's top 18 stock picks. From tech giants to resilient retailers, Paul's portfolio shows the power of diversification, long-term thinking, and a willingness to zig when others zag. Remember, this isn't financial advice. Always do your own research before making any investment decisions. Smart investing is about research, patience, and courage. Finding hidden gems, companies with potential to outperform, even in uncertain markets. Which of Paul's picks will you research next? Let me know in the comments.